TGIF, everybody. You have a screen now, Glenn? Everyone see Euro Pound up there? Okay. So this was a successful 3-driver up here, talked about it Monday. Yeah. Here. Anyway, let me get rid of this. So here was 1. Here was 2. Here was 3. Pretty classic RSI pattern on it too. So if you're patient and just wait for these, they don't all work, but some of them do. And some of them's pretty good. So thanks, David. So I wouldn't be pressing it here. So when I talked about it, it was trading a reaction, right? And the breakout was to about 90.50, right around this high. We're almost there. Maybe we go to 90. I know that Stella's looking for more. See what Stella's looking for. Hi, Amanda. Okay. So Stell's up on the trade, short from 91. Wow, it's looking for 83. That's a big trade. Okay, so that would mean we're going to negate that 90.50. Anyway, nice entry still. Although it got up to what, 93.10 or so. All right. Okay. Okay, Stella's in the webinar. Hi, Stalin, how are you?
Hey, good morning.
Hey, buddy.
I think Zoom did something today and we had to re-log in and everything. I don't know.
Oh, Zoom. Yeah. Maybe their stock will open lower today on that. Don't put it out on Twitter. ForexAnalytix had a hard time getting on Zoom today. Anyway, TGIF is also, thank God I found ForexAnalytix, and Ziggy has picked up on that. So that's Euro Pound. Taking a shot, mainly out of principle, and I think Reg is with this too, that this could be a failing rally in the dollar. I know some people I follow like Mystery, they're looking for new highs first, but I'm going to try it and see if we get something like this from here or some fib extension from here. Of course, I'm wrong over the high of the move. The 2-week off number is 98.10. I'd like to see it close under there today. But, you know, we could go all the way down to 95-ish, and then the dollar could reassert itself. So gold tried to make a new high, was unable to do so. I mean, we had nice recovery off this big plunge here, and maybe we still will. You know, it's still higher on the week. Silver's fading here, though. So silver 716. Yeah, you know, I thought we might get one more high here anyway. Took some shots at 15.18 and 17.20, 22, and had some money made halfway. Took partial profits. On a weekly basis, I still think, yeah, we're higher in silver. We're also higher in gold, although we're way off the high of the week at 34. So I also respect this comeback in S&Ps. So, I mean, from where it's like 2 weeks in a row, we fought our way back. It's an inside week. right? I think it's an option expiration week too. But now we know something here. Back under 2,800, that's the weekly 50. And it's also the 200-day is right under this low at 2,820. So back under those levels, we're going to flush under 2,700. But you know what? I almost have to give it the benefit of the doubt that there's another pop left in S&Ps. Maybe we're going to make a move back up towards 2,960 where it turned bad, and who knows, maybe we even get a shot to new highs. That's a possibility, you know, that we rally into September and peak, generate one more high up there. But I'd be taking a shot up here at 2,960, take out all these stops. Everyone thinks they're safe all the bears think they're safe here at 2,940-ish, right? So there's probably a lot of stops. People have a big lead, and maybe all we do is take out the buy stops. This was 61.8 back here. Maybe in the next week or so into, maybe nothing big is going to really happen as far as continuation of trend or a push to new high until the adults get back from the Hamptons after Labor Day. Maybe we're just going to be range bound until the big money gets back. Yen, did okay trading it from the long side, especially early in the week. This was a turnaround Tuesday play. Got out of most of them that day. Really, the yen, considering all the outside influences, actually having a positive week. It's not a reversal. We need closes over 106.59, and we got turned back there again. But I'm starting to look at this yen, and it's starting to look like we're forming some type of triangle, or maybe this is going to be a right shoulder and we pull back to 5.5 again, or you could just wait for a breakout. Breakout over there is a 200-point range, and over that level could take you back to 109 again. So do I have a crystal ball? 28.90 is the top. Okay. 3 drive in the Euro Aussie weekly, Stalin. I'll take a look at it. Oh, I don't have it up here. Let me put it up. And there's a lot of drives. 1, 2, 3. Depends where you count them, but we are diverging here. Not a bad top pick. Boy, in a day or so, really moved. Okay, thank you for pointing that out. It's not really the kind of form that I look for on a 3 drive. Okay, so if you want to learn about it, I don't think you really have it down yet, so it takes time. This almost looks corrective to me on a 4-hour. I certainly wouldn't short it here. So I'm going to turn it over to Blake. I had a lot of work done last Saturday. I've been struggling to talk all week, so that's why I'm not as wordy as I usually am. So how you doing today, Blake?
A lot of work. Work schmirk.
yeah,
You're talking about teeth work.
Yeah, you sit in the dentist chair for 6-8 hours.
Oh, no way.
I kept asking, are we through yet? Or is it over?
You're like, I gotta pee every 15 minutes.
Yeah.
Guys, the best solution is what I did years ago when I had how do you call it? We call it a bridge. Basically, I had to replace a tooth. Anyway, I was on dentist chair for 7 hours. I actually slept for 5 of them.
Yeah, what they do, give you something?
Yeah, they gave me a little bit. No, not to sleep, but not so that I don't feel anything.
Sedation,
I
dentistry. Yeah.
slept through the whole thing.
Oh my
Yeah.
gosh.
I slept on and off, but I wish I slept all week long this week. So anyway, I'll be glad to be rid of dental pain.
Yeah.
And anyway, what are you seeing for the end of the week here, Blake?
Well, the euro's, ending on a weak note, at least for right now. I mean, the euro is, we are down below the 111 level. It's going to be interesting to see where we close today. This is, I mean, we're in a descending wedge. I mean, so let me get rid of this really quick. Yeah, I'm going to get rid of a few things. I'm going to clean up the charts just a bit. And good morning, Stelios, by the way. So we are at the good morning. We're at the 78% retracement. Remember, this is like the breakdown, false breakdown, and here we are back below 111. So I think where we close today is going to be fairly important. Because you're going to have the market it close below 111, saying, "Oh, here we go. We're going to 110 the figure again." And then other people might just look at this as, hey, we're in a descending wedge, so I'll pick it up down on a dip. But the fact of the matter is the euro is trading heavy, and it's trading heavy against most currencies. You just pointed out the euro Aussie. There's a JP Morgan sent out an analysis piece that they were looking at the euro Aussie. This is yesterday, going down to 161. Which is, basically in line with what I see here on the Euro Aussie of an ascending wedge. So, we can hit support, which would come in right around 161, and that's entirely possible. But the fact of the matter is the euro's weak against everything. You look at the euro pound. This is big. I mean, this is 91 pence level. I'm assuming we're going to take stops below it, but this is also, if you look here. Okay, this fib here, this is a 50% retracement right where we're at, and we're holding it now. But when we're around all this key support, my assumption is we're gonna break through, at least test take out the stops below it. I always run the assumption that that's going to happen. Does it always happen? No, but I run the assumption that it's going to. So you have to expect that the euro pound might actually dip down to, like, let's say 90.80 before bouncing. This is because this
90.50 was big too.
Yeah, 90.50 is also big. This is like what we consider at ForexAnalytix the bull bear line. So if you
fade Stelios at your own peril. I mean, he has a pretty good hit rate. I think the highest hit rate. It may be because he only does 2 trades a year. But he has a very high hit rate.
He's a sniper. He's a sniper out there. So anyway, the euro pound looks pretty weak, and the euro just across the board looks weak. The cable, I'm so upset about this trade. I was long the pound above 121 yesterday, and at the end of the day, it slumped through this 121 level, hit my stop, and I'm like, damn it, because I was long, like, right, like 121.15 or something, and as it dipped through that support, it stopped me out, and I was so irritated because I knew I had the right call, and I woke up this morning, and of course I'm just so aggravated at the fact that the cable actually turned around and just ripped, and it's not just the pound. I was long.
You're talking guppy yesterday too.
Yeah, I was long the pound yen. I was long the pound yen, and I think I've lost maybe like a little bit for the pound yen. It was like 20 or 30 pips, which I trade smaller positions in the guppy because the ATR is wider. I was expecting a break above this triangle, like this inverted head and shoulder pattern, and I had it. I was like, okay, maybe it's not a head and shoulder pattern, it's just a triangle. But we broke out of it. I woke up this morning, I'm like, of course, everything just moved exactly where I thought. And yesterday was the case of me just being a day early and $1 short, and that does happen, and it stinks when it happens, but it is, it's normal. It's not like You know, when you're off, you're off. And yesterday I was definitely off. I was just too early. And I was telling the guys and gals in the chat room just a little while ago, being early doesn't pay in this business. You know, you could be early. Like I watch people, they'll go, like for example, I'll just give you an example of this. Let's say, you know, you're looking at the pound yen, and let's move that over. Let's say you're eventually, you know, thinking the pound yen's going to reverse, and this is a case of a lot of traders. You know, you buy it here, and, you know, you lose money. It drops a little further, you buy some more, and then you buy a little bit more, and it keeps dropping, and then finally it works out for you, and you get break even, and you're like, woo, I made money. You know, finally went break even, and I made some money. But what you did is you ended up wasting, you know, several weeks in that position, and it could have turned out even worse, but you ended up breaking even. But still, it was one of those situations where, you know, you were early. It doesn't pay to be early. A lot of times you can get smashed by, you know, trying to average in a position like that. So anyway, I was early. I took everything off yesterday because it just wasn't working out. And of course, you know, wake up this morning and everything's going where I thought it was going to go. And it's so frustrating when that happens. One of the, you know, like we did yesterday, I'm gonna do this again for you guys today. Let me pull up the bias chart for you. I want to do this just because I want to try to get you guys in the habit of doing the bias chart. If you're not doing it with Paul Franco. And by the way, Paul is going to be joining us in about 30 minutes. He's going to be joining us, and he does the bias chart, but he adds more assets in here. He actually looks at gold, looks at the S&P, you know, from a correlation standpoint. He's doing all of that. So if you guys are ForexAnalytix subscribers, make sure you listen into the European crossover webinar where Paulie does the bias chart every day for you. All right, now one other thing that I want to point out really quick: a lot of people are trying to short the bond market and short boons, and just, you know, if you look a little bit earlier, the bond market, well, first of all, we hit a 261% extension. We continue to hit new highs, trend highs, with divergent relative strength. But if you look historically on the 10-year, we still have a lot of distance to go just before we reach the long-term trend line in the bond market. So for those of you that are, you know, out there and you're all, you know, shorting the bond market, you have to realize the bond market has more distance to go if it wants to go. I mean, we could literally, this is the 10-year, right? We could really go up like this through this trend line all the way up into new highs before reversing. You know, yields right now for the 10-year are at 1.5%. We could be at like 1.3%, you know, before this is all said and done. I know we're overbought, but look, we've been overboughter. We've been more overboughter in the past. So it's not like there isn't room to run here. So you got to be careful, because the bond market, I mean, everybody looks at it and goes, oh, you know, it's definitely toppy here. It may be a little tired from running, but I don't know. You know, you look at boons. You know, I think people are trying to fade the boon market as we're you know, up against resistance, up against channel resistance. But we were talking blow off top here just a couple of weeks ago, and here we are, you know, still blowing off. We haven't really blown out and seen any significant reversal. All we're doing is we're just touching some resistance, coming down and resetting, and that's what boons are doing right now. And look, we're almost, you know, back at all-time highs again in German boons. In a world where, you know, negative rates seems to be okay in fixed income, I mean, I don't know where it's going to stop. You know, I really don't. So just be careful when you're out there trying to trade some of this stuff. Let's go ahead and take a look at the majors, and let's put up our you know, let's put together the bias chart. So the euro dollar, I just want to state first and foremost that we do have support here. This is the 78% retracement of this last move, and then also you can see a spike low down here at 110.70. So I'm gonna write down support as being 110.70. 10, 70. It's not great support, but it is support for today. Now, resistance is easy. Resistance is, you can see this big, you know, this is 111, I think it's 111.05 or 111.10. 111.10, boom, 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 you know, right around here. So, you know, any move back up towards 111.10 should be probably fought hard today, especially being it's a Friday and there's no, I mean, there's data. There's no real big economic data today. I mean, today we have, you know, as far as, you know, if you look at the calendar, I think we have
housing data.
We have housing data, and we also have Michigan consumer sentiment and expectations. Thanks, Stelios. Yeah, we have some housing data coming in. So not huge data. I don't think it's really going to move the needle too much, but we can still see some, you know, we might see, you know, maybe another 20, 30 pips up and down with the euro. So, you know, I don't think this is too far off. We could, you know, push some stops below the lows here in the euro, and then, you know, bounce back. I mean, that's, you know, that's entirely possible. So, but let's take a look at the cable. So now, you know, the pound, 122 is going to be pretty significant. You can see all of this resistance up here. This is previously 121.89. You can see some resistance through here at 122.10. So all of this is going to offer some pretty good resistance. I'm going to write down 121.90 for right now. 21.90, and then any dip back to 121 is probably going to be very well supported today, unless there's some news that's, you know, driving it lower. I still think we're in a bearish trend. I know, you know, people are probably like, oh, you know, hey, you know, we can get long here in be on the long side. This is what I told you yesterday. You know, I was long the cable, and but I knew it was counter trend, so I was just taking small positions, and I think I took like a, I don't know, like a 18 pip loss or something on my average, but it was small. You know, it was like you know, it didn't really, other than frustrating me, it didn't, you know, it didn't affect me, because I know it's counter trend. As I told you guys yesterday, I think the better trade is let the euro pound, or let the cable get back up to 123 and look for a short up there. That would be like the better trade, in my opinion.
You know, it's funny, Blake. Sorry to interrupt.
Yep, go ahead.
I heard that people saying the reason for the sterling rally today is the fact that there are rumors that Jeremy Corbyn is gaining ground and he might be the new prime minister. And I actually laughed at that, because I think that's the one main reason when I will become very bearish the pound.
Really? So explain to people why you say that.
Well, this is because Jeremy Corbyn is well known to be deeply socialist, let's say. So leaning towards the left quite a bit. And we have seen what happens to countries when the left take over, and, you know, the fiscal policy becomes very loose. I mean, we're seeing it in New Zealand, for example, right? This current government is it's quite socialist in nature. I'm not an expert on it, but from what I've read, you know, it is socialist, and they want to relax the fiscal policies, and in an attempt to bring the economy back to, you know, to give traction to it. In the long term, you know, if theoretically this works, in practice is very different. But in the short term, it's not going to be good for the currency, or for the if you relax fiscal policy, then the currency is going to suffer. So
Right.
that's the main reason why I think a Corbyn prime minister would not be good for the pound.
It's interesting. Okay, it's good take. Good take. Thank you very much for the input. That's cool. That's interesting. You know, and I think Corbyn's struggling right now with like some of the, he's you know, also having issues with the you know, possibly stopping a no Brexit deal. Is that correct?
Yeah, he is. he's basically the complete opposite of Johnson. Johnson says we leave on the 31st no matter what. Corbyn is much more, he wants to come through as being more flexible, and he does want to take the no deal Brexit option off the table. Yes.
Interesting. Okay. Thanks, Delios. So let's take a real quick look at the Aussie. I don't want to rush Delios, but I do want to get through these charts. The Aussie is, consolidating here. But here, let me turn down the speakers to my office so you guys probably hear these guys yammering away. If you take a look at the Aussie, as I explained to you guys before, while we're below this 68.30 level, I got to remain bearish. But that doesn't mean we can't get a move near term. Just like the cable, it's like I think we can make a move up to 123 in the pound. It's possible, but I would look at that as a better opportunity to sell. Same with the Aussie. It's like, okay, well, if the Aussie moves up here, to 68.30, I would use that as an opportunity to be on the short side. But we can still get a move between 68 and 68.30. It's quite possible. So I think a move above 68 cents resistance right now. You can put 68 and then 68.30, and then I'm going to put an asterisk next to that because I do think that that's key resistance. We are still bearish while below that, that resistance zone. Support right now, since we're in a triangle here, support's going to be at 67.60, and we could very easily just be range bound, going into today as well. So that's something else to think about. Let's go ahead and take a look at the Kiwi. So here's the Kiwi. Kiwi's still trading extremely heavy. It's hard to have any love for the Kiwi, especially with the RBNZ and the rates, possibly going negative in the future. And as dovish as they were, I mean, this is a bearish wedge. You could look at it as consistent lows and lower highs, but we're in a very tight range. So I mean, a move above 64.40 or move below 64.20. I mean, we're basically there. We may break out today. We may, and this is this type of move up here like this could suck a lot of longs in, and I don't think that there's any reason to be on the long side while you're below the 65 cent level. But 64, let's just call it 64.45. And I mean, look at how tight this range is. 64.20, and I'll tell you, while the Kiwi trades down here and below 70 cents, the risk is increasing that this currency pair, the ranges are going to continue to tighten the lower we go. I mean, it was ridiculous when we would go down to, we were down in the 50 cent range in the Kiwi. The daily ranges were 30 pips, or it was a good day on an ATR. So, it's no fun as a major trading, that tight of ranges. Let's take a look at the Canadian. So the Canadian, struggling up here at the 618. I still think that 133.54. So I'll just write 133.55 is key resistance, because that's the 618. I do think it's range bound. I'm so unexcited about the Canadian right now. Support at 132.50. I think these numbers are pretty much the same as we wrote down yesterday. Okay, which is channel support. If you guys can't see it, it's channel support right through here. Dollar max. So the guy in my office who's really kind of specializes in emerging market currencies. Yesterday he's like, they're going to cut. He goes, and everybody the day before, right here through this move, he's like, the traders knew that we were going to cut. And once we cut, the Banxico cut, we spiked up into resistance and then just failed. It's because so many people probably had the information ahead of time. The fact of the matter is, we are holding above the 200-day moving average, okay, which it comes in at 1930. Well, right now it's 1935, but that's also spike low. So I'm going to write down 1935 is the support. 35, and resistance is 1977. And while we're below here, you just got to trade it as a range. But I will tell you this, you know, the Banksco is now, you know, cutting rates, and there's a risk, increased risk, that we break above these highs. Oh, wait, I think we have the news coming out. Oh, yep, here we go. We got the housing starts. Sorry, totally forgot that was coming out. Like I said, I don't expect a big mover today. Stelios, how's the data look?
Yeah, building permits slightly better, housing starts slightly worse. Overall, I think a big dud. So
I wasn't expecting any type of activity here, and looks like we're not getting much of a move at all. You're right, and it's the housing data. You know, housing data is being stretched in two different directions. You got one where, you know, housing is, because of prices, is the demand is weakening just in general, because house prices are quote unquote too high, or near, you know, historic highs. If you look back at the housing crisis, we're near those levels in a lot of markets, including where I live in the Arizona market. So, you know, homes are at prices where they were at the peak or near the peak of the housing crisis back in 2000, whatever it is, 2006, 2007. The flip side is to that is rates are so damn low that demand is staying strong because of that. So, you know, you've got this push pull between, you know, lower rates and then also high prices, where, you know, so it's kind of at a stalemate. You know, real estate is one of the two is going to really help the market. Either, you know, the demand is going to, you know, just be anemic regardless of low rates, and then we're going to start seeing prices come down, or you're going to start seeing you know, prices come down, but rates stay low, and demand will be pretty steady on the way down. So right now, housing data isn't going to tell us much, I don't think. Overall, at least not in the U.S. housing market. Could be different in other places. Let's go over to the. So take a look at the Swissy. So the Swissy, you know, we're actually pushing some pretty key resistance here. This is a previous support acting as current resistance. This is support from mid-July. We have the 50% retracement that comes up just above that, and you can see if I took this line right here, and you can see these spike lows over here. That's going to come up right to the 50% retracement. So I'm going to say that resistance is right where we're at, and then all the way up to 98.15. So 98.15, I'll write down as resistance right now, 98.15. Okay. And I do believe that we're range bound. This is one thing that I want to say to you guys about the Swissy. If there's one, and I want you guys to listen very carefully to what I'm saying. If there is one thing that will tell me, okay, if there's one thing that's going to tell me that this market, we are in for a heavy dose of risk aversion, okay? So if I want to be clear that the risk aversion that we're seeing in the stock market is real, that means that, oh my God, stocks are coming down and we're going to come down probably fairly aggressively, is looking at the dollar Swiss. And if we break this big trend line, and I blogged about this the other day, Nitish pulled it up and he said, hey, this is a big trend line that we're on. This is earlier this week. I think it was Wednesday. And we held it. We respected it. We hit 97 cents, bounced pretty good off of there, telling us that, hey, the stock market's not ready to fall, which it didn't. And you know, we're safe for now. But I'll tell you, if we break through these lows, we break through this trend line support at 97 cents, and we break through these lows, in my opinion, all hell is breaking loose. Now, think about what I'm saying here. The Swiss franc, let's see, where is it? Okay, this goes along the topic that I was discussing at Trader Fest last weekend. If you look at Switzerland's negative interest rates. Okay, they're at negative 3/4 basis point. No one wants to hold Swiss francs. I'm not going to pay the Swiss National Bank 3/4 of a point for me to park my money in Swiss francs. It ain't gonna happen. I got to deploy that money elsewhere. With the S&P up however much it's up for the year, I can't afford to not have, be holding Swiss francs and not having them deployed in other assets. But if I have to reverse course and I start buying Swiss francs again, that's telling me, or that's telling the market, holy cow, I need something safe. Put me back in the Swiss francs. So that means if the dollar Swiss actually breaks through 97 cents, to me, that would be a pretty clear indication that the proverbial poop is hitting the fan. I hope that made sense to you guys. I hope that that made sense to. Oh wait, the euro pound just broke down, by the way, just so you guys know. Where to go?
Yeah, euro sterling below 91 now.
Yeah, we're below 91. So we're here we go, probing the stops below here. I totally think that's what's happening at this very moment. We're just, pushing the stops below 91 pence. Let's see if we're going to get if it's going to be sustainable or not. Let's go over to a 5-minute chart. Yeah, we're just taking the stops below, and the the euro is being hit as a result. Okay, so okay, I'm going to come back to this because I still need to get through these charts. I only got like 10 minutes to go, but I wanted to tell you how important that support is. Now that's not anything within the realm of possibilities today, in my opinion. So we're not going to see that support today, unless China invades or moves into Hong Kong while I'm not looking. That might actually do the trick. But for today, realistically, I would say that intraday you got some support that looks probably like this. So any dip down to 97.70, probably going to find some support. 97.70 will be support. Intraday. Let's go over to the yen. By the way, watch the euro pound. The euro sterling is probably going to bounce here. It just took out all the stops below 91 pence. If you guys are short, just be careful. I wouldn't be surprised if we're at 91.10 and give it about 10 minutes. So here's the dollar yen. Dollar yen's range bound, and matter of fact, I think I have to draw something here before you guys get all too crazy about being long these yen pairs. Let me delete this. So 106.50, 106. I think that's a pretty good basis of a range today. 106. 106.50. Try not to get too terribly excited about the yen right now. I have a feeling since it's Friday, we're just going to be, kind of range bound here. All right. Dollar index. Let's go over to the dollar index. Here's the Dixie. Get a little. We surpassed the 618, so this is going to be some pretty key resistance up here at 98.40. You can see all this. This is. Let me grab that line, move it over a little bit. 98.40. It's going to be good resistance. We're just kind of grinding higher on the dollar index, so you got to look at. I would look at something that looks something like this. Might have a little ascending wedge into some resistance here. So. With that being said, resistance being 98.40, support is right down here at 98.13. 98.40, 98.13. Overall, we're in a range. You might go, "Oh, Blake, we're trending higher right now," but yeah, look, we're right into resistance and probably what I would consider a big ass range. So. Just be real careful about, being aggressively long the dollar. This is one of the reasons why I'm a little worried about, people getting too carried away shorting the euro here, because the euro is just falling because of the euro pound right now. You guys understand that, right? Like the euro is under pressure because of the euro pound, which may continue to keep it under pressure. But, looking at the dollar index, I mean, we're probably up against some resistance soon. So the euro is probably going to catch a bid at some point here. So just, it's just some food for thought. All right.
Why don't you explain that to people?
What the cross rate effect?
Yeah.
Yeah. Well, the euro, the euro is the most, commonly or most liquid currency in the currency market is the euro dollar. Next to that is the euro pound. Some people would argue that it's the sterling, the pound dollar, the cable, or that it's, maybe the dollar yen. But I would argue that the euro pound or the euro sterling is probably up there in the top 4 currencies traded. So when the euro pound, where is it? Oh, here it is. When the euro pound comes under pressure, okay, it's going to weigh on the euro dollar. And if the euro pound bounces, because you can see we're right, at the support here. Let's say we bounce a little bit, then the euro might catch a bid as a result because it came under pressure because of the euro pound. If we bounce here, we might get the opposite effect. So therefore, the euro dollar, you got to be a little careful trying to be on the short side of the euro dollar at this point. All right. I hope that helped explained it. It's a little cross rate effect.
So it's people unwinding what's been working for months.
Yeah.
Being long euro pound. So to come out of it, they have to do the opposite.
Correct.
Got it.
And we can see that too, because if you look at the you look at for example, the euro Norwegian krona. Now I think a lot of this has to do with the Norwegian central bank this week, but this isn't really responding. You look at the pound, the pound's up, the euro's down. The Aussie's really just kind of sideways. This is all euro action. It's all euro. It's not necessarily the dollar per se. It just, the dollar index is so heavily weighted in the euro that it's influencing the euro, or the dollar index. The euro is. Anyway, let's take a quick look. Here's the US dollar Swedish krona right up against resistance here. This is pretty big resistance. I'm going to write 970. Is huge. 969, 970, huge resistance. From a risk reward perspective, I'm not doing it, but it looks like a good short up here. I mean, from a risk reward perspective, if it is bullish. I would say it's bullish because we're in a bullish wedge. But oops, I didn't mean to do that. Let me delete this here. But what I would be thinking here is, if you want to take a stab at it, if you think the euro is going to bounce, which you can see the euro is starting to bounce right now, just take a shot at the euro, the dollar Swedish krona. Just put your stops above the highs. I mean, it's good risk reward if you believe that the dollar is going to weaken from here. You know what I mean? If that's your belief, then you got a good risk reward setup. For those of you that don't, and you're like, no, the dollar is going to rally. Well, then you're probably going to wait for a breakout here. Depends what, how should I say it? What side you're taking? Because, I think you can argue both sides, dollar strength or dollar weakness. It's not a, I think it's up for a debate. I don't look at the dollar as saying it's definitely going higher, or look at the dollar, it's definitely going lower. I can argue both sides. So that's why I'm not married to any dollar positions right now. So anyway, that's good resistance. Support right now would be right back down here at 964. Let me just finish this up really quick. US dollar Norwegian krona, it obviously had a good rally. Norwegian central bank, a little bit more dovish than the market was thinking, but we hit the 161% extension of this move. 161% extension of the 2019 range really takes us up towards 909, but it looks like this 906 level, 905 level has capped it for now, and a break back below 895 would be bearish. So for the pair, so 895. 905. And just so you guys know, I actually shorted the US dollar Norwegian krona today. I actually took a very small position closer to 901. So, but this is in a bullish trend. It's definitely not a huge position. I'm more just kind of scalping around. But a break below 195 or 895, and I'd actually step up my position a little bit. All right, guys. So here is your bias chart. It's done. With that being said, I want to bring on Paul Franco for the last, 10 or 15 minutes here, because Paulie, during the European crossover, which he'll give you the time here. Paul, are you here?
I'm here. Can you hear me?
Hey, buddy. Hey, so what time is the European crossover? For those people that are ForexAnalytix subscribers and they want to tune into your webinar, what time is it?
It's 3 a.m. Central Standard Time, 4 a.m. Eastern.
4 a.m. Eastern.
Monday through Friday.
So just remember, when you're looking at the ForexAnalytix platform, if you're like, I don't even know where to log on, see this little button here? It says Webinar on Air, join. Okay, you can do that with the European crossover, but Paul goes through the bias chart, and you add more assets to this. Don't you?
Yes, I do. And also, actually, for those that aren't available, Stelios records the webinar and then makes it available about an hour and a half before the New York Open. So, if you're, he makes it available in the chat room. So if you're like, well, I'm not going to be up at that time. I only trade the New York session. Okay, well then Stelios posts a link to the webinar.
I also issue an alert on the platform, so you can't miss it really.
Awesome. And so in the alerts on the platform, just so you guys know, these are bell notifications here, but you can get to them right through there. You can see these. This is how you can get to all the links. All right, so. Paul, I think you are, one of the best assets for ForexAnalytix subscribers, and the reason why is I've known you for probably like 6 or 7 years now. And one thing that I know about you, even before I brought you on at the Wise Trade Group, is you trade for a living, and I'll be the first one to admit, we don't pay you enough money to live on. I wish I could, and I wish ForexAnalytix could really, provide you, the lifestyle of rich and famous. But that's just not the case when we have a technology platform, and we're just trying to offer it at a great value proposition for people that are listening in to be part of our community at a cheap cost. Well, the price to be paid is those of us that are involved that help manage ForexAnalytix. We just don't get paid a whole lot, and I'll tell you that you're highly, like you and Dale and Amanda and the rest of the team. You guys are so appreciated by us and the community. But the one thing that I love about Paul Franco is that I've known he's always traded the markets and made his living in the markets. I'm not going to brag about the nice car that you just got, but damn, that car is nice. I haven't had one of those since, and you guys can just speculate what it is. I haven't had one of those since I was in my early or mid to late 20s, and the car that I'm talking about.
That was before you were married, right?
No. Well, it was before I was married. I still had one when I was married, but it was before. It was pre-kids.
She made you get rid of it, though.
Yeah, it was pre-kids, and but a car like that is bought by somebody who makes some money in the market. So congratulations, Paul. I won't disclose what it is, but it's definitely cool, and I am definitely jealous. So because I can't fit my kids in the backseat of that damn thing. Anyway, hey, I want to say, I'm going to pass over the baton to you because I want you to just maybe give the traders for the next 10-15 minutes. Do we have an interview today?
Yes, Blake.
Okay.
And I just want to make sure that people don't confuse the European crossover with the European cross-dresser. That's Steve Volke. All right.
He's not even here to defend himself.
He's here during FACE.
He's not even here to defend himself. Oh my gosh.
That's when I do it.
All right. Well, hey, Paul, thank you for being here today. And I want you to know, and you know, those of us that listen in and listen to your analysis, we really appreciate you. And I think more people should be listening into what you do. And Dale, thanks for always being a great host, and especially this week. I know your mouth is hurt all week from your oral surgery. So,
yeah.
so I hope you spend the weekend
man.
on some meds.
Well, and football started, Blake.
Yeah, I know. It's
preseason anyway.
Let's not talk about Kyler Murray and the Cardinals.
Okay,
all
yeah.
Right. So anyway, you guys all have a great weekend. Thanks everybody for being here. Stelios, have a great weekend. Thanks for always being here, and I'll talk to you guys on the week ahead video.
Have a great weekend, Blake.
Thank you, Blake.
Bye-bye.
Dale, you can see my screen, can't you?
Yeah, I got it, Paulie.
Okay, great. Thanks very much. Yeah, we actually came into, you know, and thanks for the kind word from Blake, but we also do I do the daily wrap up, which is Monday through Thursday at 12:30 Eastern. It's just a quick brief, basically, as the title says, a roundup of FX pairs, open to everybody that wants to log in live, although I think it is made available later on a recording. But I always advise people is if they want to go and try the platform, 10 days for $1. To me, despite all the great analysis from Steve, Stelios, Grega, and everyone, to me, the real strength is actually the chat room, because we have so many diverse traders in there, and everybody's very supportive. Everybody shares their information. To me, I think that's the strength of ForexAnalytix, despite all the technical advances that the platform does provide. But anyway, getting back to, we see here, as Blake said, the euro's under pressure. We actually had our bias chart support today for the euro at 10.75. I'd actually got long yesterday, and I actually had a position here at 11.10 as we were dropping down. Market tried to hold here. My thoughts on the euro here is, and actually I think you can see it here on the daily, but the 2 hours just as well, and that's the one where I focus in on. And I'm leaving it here because I think what's happened is, and we're kind of pressing here, and you can see on the daily we've got support here at 10.79, but you look at this body here, it's actually 10.75, and lots of times that's where I get my analysis, not analysis, but my support and resistance zones. People will say, well, why don't you put it the high or the low? And I always say, how many people sold the high, how many people bought the low? So I go through the body touches, because that's where all the volume is. And for those that do trade using volume in futures markets, they know how important that is. But that being said, to me, the reason I'm leaving the chart here this way is because a lot of people thought that we were going to break out in the euro, and it looked like we could possibly see a move up to potentially 114. So these markets kept pushing up in here, and we had our bias chart resistance a few days ago, I think at 12.11, and then we moved it up right at 12.28. And I said, at the time, it was on Monday, I believe it was, and we were right at 12.28, and I said, look, the market's going to have a tough time getting past this in light of what was happening with Hong Kong. That's right when really they've been heating up, but really took it up to another level. And we started to pare back, and with the analysis we had, saying I think it was the next day or so, I said, hey, look, we've been trading a lot in this range between the 11.90 on up to about the 12.30. If we flip that range, that's going to take us to 11.50, maybe a little overshoot to 11.45. And we did just that. And then obviously yesterday we started coming off, and the euro was kind of holding its own, but what kicked it in the teeth was the story out that the ECB is going to bring out their big bazooka for the next meeting and so forth. And we saw the euro come in and, more pressure. When we talked about the euro this morning, I said, look, those people that had been in here, most of them got knocked out of the box. And anybody that hung on any longer from there, those people were forced out of all their positions. And at that point, the market has to kind of like reassess itself. Well, Blake's used this analogy before, you fall off a ladder. You don't just jump up. You kind of like lay there on the ground. You're like, am I okay? Do I have broken bones? I'm not going to jump up. And so I think as we go into Friday and we talk about this, one guy that 50 pips would always refer to, would be the Friday moves, meaning when the market puts on a position, if people get stuck in the wrong direction, the market knows, and we've talked about this. I talked about this when we were pressing up here against some shorts in the euro, and that worked out really well. Was I said, in a situation like that, the market's no one's gonna. There's no motivation to step in and buy the market ahead of time. So the market knows that any longs are under pressure. So it's going to push those as much as it can. The same way we talked about shorts the other week. We talked about, hey, the market knew that there were trapped shorts. It was going to keep pushing longer. So I think that the market will be okay. But what happened is, like I said, these people got knocked out. We have to reassess, and then the market comes down here to test its support. Obviously, some pressure coming from the euro pound. But one of the things I'm looking for, and I've been mentioning it several times in the chat room, and I got it from you in reference to your guest. And I remember you were talking about this. It was a couple of weeks ago when your internet got knocked off or something, and you had mentioned in the chat room or something about your guest. It was rescheduled. And that guest was stating that he thought that we were going to have an intermeeting cut. And I think we will have an intermeeting cut from the Fed. And I think that it'll probably be 50 basis points because the market would just laugh off 25 basis points. So I think we can get an intermeeting cut from the Fed, considering how things are starting to deteriorate. If they deteriorate more, to me, I think it'll come within about a couple of weeks, maybe 3 weeks at the top, at the most, I think, as long as we continue to see this pressure. And the administration, not playing politics, but the administration, they really did a very, very poor job. Talk about the art of no deal. So now the Chinese are in the driver's seat, and they're not backing off, and they're not playing the game anymore. They're just sitting back and saying, kind of like what Steve said about his saying about, you don't let an enemy, you don't step in the way of an enemy that's, kind of like basically, doing themselves in. And so now I think I've even seen the administration even say the Chinese aren't even responding to, will they not do this or not do that? They're just not even engaging anymore. So I think that that's going to continue to weigh on our markets. And I think we will end up with an intermediate cut, and then you'll probably see the dollar pop back. I don't think it's going to be, we're going to break in one direction going one way or break in one direction the other way, but I think that we'll have a chance the euro probably bounce back up, and then we'll see what happens at that point and what happens with the dollar. I don't usually look longer term. Our bias chart that we set in the morning is set for the scalp or short-term trading levels for the day, for that morning up to the next 24 hours. And sometimes we get pretty good. Sometimes we catch some of these turns very, very closely. So I'm just, like I said, in the few minutes I have, I don't want to focus too much on the different analysis. We don't have that much time, but I want to give a little bit of a flavor of what we do in the European crossover webinar, that it is very available in the chat room if you don't trade in the European session. And we do have a plethora of traders that do that, but it's made available about an hour and a half before the New York Open. Blake was referring to the interest rates, and I do want to go on and get into that, take a look at that before we buzz off. And let me switch into that. And that's been the boon. And man, this boon has just been like something else. Like Blake was saying, kept looking for a blow off top, and blow off top where? You can see this is just like nuts. Look at this move that we've seen here. And this is what actually kicked the euro down when it was, not now, but about, was it 3 or 4 weeks ago, when it looked like it was trying to make a breakout then, and the bunds, started moving lower and lower, and now we've even just aggressively just gone like gangbusters. And even though the 10-year yields have come back up a bit, they're doing better than, let's say, the bunds. The bunds are still up here. They've gone so far that you would think you'd see a bit of a pair back. But if we do see that, we can see the euro quickly bounce back. So it's kind of to me, I believe it's a bit of a fluid situation. We are under pressure. There's no need, if you were thinking about buying the euro, there's no need necessarily to step in today. You can just, I tell people that when it was going the other way around and the market was rallying, and I think it was a couple of Fridays back, and I said, there's no need for anyone to bail any shorts out. They're going to provide an undertone bid to the market. Well, it's the same thing here. The pressure is going to remain as we go through today, because the market is going to want to weed out or make those that are long, maybe some late longs, pay up by forcing them out of the positions. And then maybe next week, if we see the bunds kind of relax a bit, maybe we'll start to see this euro come back in. But that's really been the real driver. And that's what's been the big driver for gold. I used to follow gold a lot more closely, and people would talk about gold, as far as the dollar or gold with equities. And gold would sometimes respond a little bit to the dollar, but it was the break in interest rates which really fueled the gold market and still remains, fairly strong here. But once again, like I said, these are what you want to focus in on are these yields, and that's what's really going to drive this market. If we can get the bunds to come back in a little bit, that'll probably allow the euro to pop back up. I think the euro can make it back up to 11.65.70 without too much trouble. If we can see the bund back off, I don't think it changes anything for the bund itself from a longer term perspective or medium term perspective. But anyway, I just want to give a little bit of an idea of what we look at in the European crossover webinar, and I'll let you go here because I know it's time for your guests. But thanks for allowing me to go and step in and just share a few things in regards to our webinar with ForexAnalytix.
Your stuff is elite, Paulie.
Well, thanks, Dale. But I like to listen to you. You really have some. Boy, you have some good nuggets I know traders respect what you say, but I tell you what, I picked up so much from you. I'm just saying is the stuff you could actually do you could write a book with all the different bits of information and market truisms that you have and that you can use today and continue to work and are very profitable.
Well, we'll do one together, buddy. How about that?
There you go.
All right.
Well, I'll let you go, and good luck with your guest today, and thanks for allowing me to step in.
Have a great weekend cruising, buddy.
Okay, bye.
All right. Okay, Norm, I see you. I did see you. Let's see, where are the participants? Here we go. Oh, there. Okay. Okay. Well, I guess I'll have to grab it. Okay. Okay, Norm. You're now a panelist, and I'm going to unmute you.
Can you hear me now?
Got you, buddy. So
Yes.
we're just waiting for a screen share,
Okay.
and you just hover your mouse.
I think you're in a new vehicle here, maybe.
Yeah, Zoom. So
Right.
you just scroll your mouse. You'll see a green box that says share.
Where do I find the green box? Should it be up now?
It should be around the drop down. Just move your mouse around the drop down menu. You're a panelist.
Do I
and
go
you'll see
to
a
the
green
right,
box.
to the top, to the right, to the bottom?
Try the top and the bottom, and just move your mouse around and look for a green box.
There's a couple green boxes at the top
That
there.
says share.
Oh, it's tiny.
New share.
Well, I'll have to blow it up. So hold on. I'll take a
No,
picture.
no, you don't have to blow it up. You click it.
I know, but I can't read it. It's tiny. Okay? So I'm going to take a picture and blow it up so I can read it.
All you have to do is click it. You don't have to read it.
Let's see. I don't see where it says. Oh, that's me. That's I don't know what that is. Okay. Nope. All right. If you can tell me exactly where the share button is, we can go. Maybe at the bottom here. I don't know. Let's see. Share. Questions. Oh, I think I found it at the bottom, maybe. It looks like a green.
Yeah, you crotchety old guy. Go
it
ahead
looks
and
like a
click
green
it.
Suitcase. There we go. Maybe.
Yeah.
Yes.
Yeah. You don't start acting a little bit more polite, you'll end up in a suitcase.
All
All right. So there you go.
All right.
There you go.
Now I got to find you. Where'd you go?
You don't have to find me. Just pick the screen you want to share.
All right. I'm going to put my notes up then. All right.
There they are.
Can you see my notes?
Yeah.
Okay. Good morning, Dale.
Yeah. Good morning.
Okay. Did you want to introduce me or should I introduce myself?
Go ahead.
Okay. My name's Norm Witzke. I got over 50 years of studying the markets. I started studying the markets when I was 15. I was successfully investing in college, made enough money in the 70s there during college I stumbled on the opportunity to buy a membership on the Chicago Board Options Exchange. It became right out of college there. I was landed in Chicago in spring of 1975 And I was a market maker on the floor there at age 24, and I did that for 12 years. I also traded on the Chicago Board of Trade.
What were you active in on the SIBO?
I landed. It was. Walked on the floor. One of the posts that was near the exit was 3M, and my dad once said he liked 3M, so I thought, okay, I'll land here.
Okay. All right.
And then later they added. We got controlled data. Later they added controlled data and we had a couple of dogs too. We had General Foods. And which is, the products are still around, but the company.
Did you do a lot of option writing? You take the other side of the trade? I
was a market maker. I was taking the other side of the customers' trades,
So you're filling orders when you were down there?
No, not filling orders. No, I was helping the brokers fill those orders by somebody's got to take the other side of the trade.
You're a liquidity provider.
I'm taking the risk.
Okay. How did that tie in with your Astro work?
Well, I would lean buy or sell depending upon what I thought how the planets were pointing,
Okay, well, I was looking at the sky last night, and it was a beautiful yellow full moon, and I was wondering what Norwinski was thinking into this full moon here. Important turning
I'm going to show you the moon and what it does, how it correlates to the markets.
Okay, Moon Man.
First, I'm going to give you so your folks there some general information that I've learned over my 50 years. First of all, don't forget about the news. He who trades the news will lose. This is some of the things I learned on the floor, Okay. He who trades the news will lose. Get rid of all your lagging indicators. That includes moving averages, oscillators. Those are all lagging indicators. You're going to be at least one step behind the market and everybody else if you're doing that stuff. I tell my students use naked bars. Naked bars, get rid of all the moving averages, all the oscillators, get rid of the candlesticks, all that. Just use simple trend
Well, there's
lines.
more than one way to skin a cat, don't you think?
Well, I'm just telling you my approach.
Okay.
If you want to know what's going to happen in advance, you do it this way. If you want to be one step behind, do it the other way. That's how I see it.
Okay. Well, you know what they say about opinions, right?
I get rid of your opinions. I agree.
They're
Don't
like, what?
Don't trade your opinion. Trade on your objective indicators.
No, everyone has one, an opinion.
And it's like, like our buddy Larry says, an opinion is like your armpit. Everybody has one. And
Yeah, that's right. Okay. So
anyway,
why don't you
we
tell
try
us
to get some objective indicators. Mr. Gann, I was a student of Mr. Gann for many years. I've reduced Mr. Gann to the essence of what Gann was doing. He was an astrologer. He was using the planets to time the markets. He didn't tell people that. He kind of kept that under the radar because he was worried that they would take him away in the wagon, the funny farm, It was not politically acceptable back in his day.
What do you consider to be the essence of Gann?
One of the most important principles of what I was about to say is that time is more important than price.
Okay.
Trade the time. Don't worry about the price, because when you get if you get the right time, that time will give you the price. Okay. If you have the right time, you'll have the right price. Okay. You don't need to predict the price. All you got to do is predict the right time.
So your work is based upon looking for time windows for reversals.
Yeah, exactly.
Okay.
That's what I'm going to show you now. So here's my notes here. I would recommend anybody can, this is going to be the essence of my talk here. So if you could take a screenshot of what I have on the screen now, that will help you as we go through this, okay? This is kind of the guide to what I'm going to do, okay?
Okay.
So I don't know
and this is yesterday's newspaper
we'll give
at
them 10
first, right?
seconds or something, hopefully, and I'll take a picture of that, okay?
Okay.
9, 8, 7, 6, 5, 4, 3, 2, 1. All right, we're launching now. All right, notice we have different events here. Now let me explain some of the phenomena I have on the screen here. Some of your folks may not be familiar with some of these things. We look at the planets and the moon from the point of view of the Earth. That's called geocentric, and from the point of view of the Sun, that's called the heliocentric. And from the first thing we're looking at here is Mercury turning direct. That's it's kind of become popular in pop culture to talk about Mercury going retrograde, and direct are opposite each other. It's due to the relative motion of the Earth to the other planets. Just like if you're driving in your car and you're doing 60, and you glance out your side window and somebody's passing you doing 70, you might get the impression that you're going backwards because it's all relative, just like Mr. Einstein said, okay? And that's important. So when that happens, there's a change in the relationship between those two bodies. And apparently when that happens with the planets, the Earth passes a planet, Earth passes us, or a planet passes us, that causes a change in the energy field. And so as you will see, this works very well at a high percentage of the time in forecasting a change in trend in the markets. When my little phrase is, when the planets change trend, the markets change trend. These are called when the planets stop to turn and go to either direct or retrograde. That's how they appear here from on Earth. That's called a station point. Momentarily, they stop their motion and then reverse their direction. When that happens, it's like a little shock of energy through this solar system, and apparently that affects how people think about the markets. And we also have the moon. You will see the moon is very important, new moons, full moons, and so forth. But on the night of the 31st, into the early wee hours of August 1, we had both. We had both a new moon and Mercury turning direct. This is a very powerful combination. It doesn't happen very often, and this often brings important turns in the markets. For the stock market, for example, a cousin of that one, let's see, for example, August 18th, 19th of 2015, we had Mercury turning retrograde on a new moon within 1 day of a new moon, and that was a high day of the year. October the 11th, 2007, that was the high day of 2007, which led to the big meltdown, big meltdown. So there we go. This is a very, very important combination there when you get a planet doing something important right on top of a new moon, full moon, that kind of thing. All right, next we have Venus perihelion. Perihelion, a lot of these terms come from either Latin or Greek. This happens to be Greek. Dale, maybe you know a little Greek. Remember that guy used to live just down the street? Okay, and that's a little joke there, Dale. All right, perihelion, peri is close. Helion is from the Greek for sun. That means when the Venus, as it goes around the sun in a 225-day cycle, is closest to the sun. By the way, 225 is 617 of the Earth's orbit of 365 and a quarter. That's kind of close to a number that you might be familiar with. It's called 618, right? That's all built into the solar system there, it's all Fibonacci's all through nature. There we go, greatest Mercury, greatest elongation. Now, anytime we have an extreme in the planetary cycles, this has to do with the relationship between Mercury, Earth, and Sun, and it got to extreme here on that night, the night of the 9th. And then we have Helio from the point of view of the Sun. Mars entered Virgo. That was a huge weekend, the 9th weekend, and we had a big cluster of huge stuff. And then now we're up here to a day or so ago where we had a full moon, the night of the 14th into the wee hours of the 15th, and then the morning of the 15th. Yesterday we had Mercury at my other top thing is that the planets go around the sun, they're like horses on a carousel. Not only do they go around and around, but they also go up and down. Apparently when they get to their midpoint there at 0 latitude, that's also a very important energy point. So now we're going to look at some charts based on that. The markets that are indicated, for example, Venus was indicated here on the from the night of the 7th. That would be August 8th. Let's go see what happened. Venus is the planet said to be the planetary ruler. Every sign in the zodiac has a planetary ruler, a planet it's associated with. And Venus is one of the signs that Venus is associated with is Taurus the bull. Dale, can you think of any commodity that might go with Taurus the bull? Are you there, Dale?
Yeah, I'm listening. Any commodity, Taurus, a bull, cattle.
Exactly. This is first grade intelligence.
Oh,
here.
good. I'm glad
Yeah.
I could answer what a first grade.
Yeah, this is not rocket science. If you're thinking beyond the first grade or so, you're in trouble with this, All right, there you go. Here's cattle. You can see the cattle had a little bit of a bounce there I had 2 dates actually for cattle, into the 8th and the 9th. And look what happened there. It had a little bounce there. The 8th was 1 day early. It didn't go much higher. And the next day, and look what happened.
Was that a cattle on feed report?
On, I don't know what, I don't pay attention to the reports.
All right. Well, it
So
looks
anyway,
like it
so
was
there
a
you go.
limit down move
You came
and a
in,
big gap.
Monday and it's lock limit down. It's not even trading. The cattle got slaughtered on Monday. A little cattle joke there, you see.
Yeah.
And there you go. Now, boom. Now that's about, I think, about an 8-cent move there in about 2 days. And that's, every penny in cattle is worth $400. So that's a nice chunk of change,
Mhm.
8 cents times 400. That's $3,200 in a couple of days. All right, let's go look at copper. Copper was indicated for the 8th and the after the close of the 9th. That would be over the weekend into Monday. And there we made a nice stop there. This green arrow, if it's a green arrow, I consider that a winner. And every now and then you'll see a red arrow. That's a miss. If you add up my green arrows and red arrows, let me know how I did. I think I don't have very many red arrows. All right, here we go. There's a top there for the copper. It declined into the Monday the 12th, and there's a nice low. So you had a nice move there. I think about about 4 cents or so. I guess I'll have to blow that up so I can see how big that is if I can. Oh, no, the scale went off the page. Okay, I'm going to guess that's at least about 4 to 6 cents. Every penny in copper is $250. Here's your corn. Here's a good example of now the grains. There are two top short-term indicators for the grains are the moon, new moon, full moon, and when Mercury does something, that's important too. And the night of the 31st into August 1, you had both. You had the new moon and you had Mercury turning direct, and that's why we got two green arrows there. And look at the nice little low you made there in the corn. Every penny in the corn is worth $50. And so you moved up there for a nice move, and then we had these dates here. We had I think the 8th and the 9th, and we made a beautiful top there. And this was funny. Over the weekend there, we had Mercury greatest elongation, so that's our Mercury point, and that's the grains. And as you can see there, the corn was moving up a little bit on Friday, and then on Monday, a little background information. The past several months, and just a few months ago, the middle of the country, the Corn Belt, was underwater supposedly, and some of the grain analysts were saying there may not be any corn. Corn should go much, much higher. They didn't even know if there was going to be any corn, hardly. And so, look at the corn's going to be much. You can see here that they were, price-wise, the chart said that they weren't so right because corn was coming down. Then we got this little bounce here into Friday the 9th. And then what happened? There was a crop report on Monday, and all of a sudden the crop report said, "Well, we got plenty of corn," and bang. So anyway, this got you into the market ahead of time before the crop report, and then you could make some nice money. I think we're a lock limit down there on Monday after the report. So if you want to be ahead of the market, you need to be looking at these cycles. Otherwise, you'll be behind, and that could cost you. All right, here's cotton, making a top there on the 8th and a bottom. I had that date there, and that all worked out pretty nice. And here's your gold. Had a miss there on the for there. Oh, don't forget the moon. The moon's precious metals too. Made a beautiful pullback low there right on August 1, and then we had a nice rally there. That had a miss on that date. I got a green box, means we're still waiting for the market to tell us whether they're right or wrong or not. And so it's only went sideways since the full moon yesterday. And I don't know what it's done here in the last few hours, but as of last night, it really wasn't telling as much. So it's like an open decision yet to be made. So we don't have enough time or enough price action to tell what's going on there. I'm going to have to turn off my phone now so that doesn't bother us. And then we go oats. There's oats. The grains again, the dance to the moon and Mercury. There's August 1. It was 1 day off of that low there. And then we went up and made a top there right on the 9th, which I had due to Jupiter turning direct. Jupiter's oats. And then we pulled back there for the, that was another date there on the 8th and 9th. Then we had another date over the weekend, Jupiter, the point for Monday. And that was 1 day from that low. And that's not very much money. There may be a couple of pennies. And it's a penny in the greens is $50. So you didn't have much of a drawdown if you bought there. Here's OJ. Nobody trades it, but it's interesting just to watch it. And so you got high here And we're right on the moon. And there over here too, we had a point for the OJ. And those gave you a couple nice tops. Here's your silver, had a nice pullback on August 1. And there you go on the new moon, August 1 new moon. And then we rallied up and we were waiting to see how the full moon from yesterday correlated with that. Here's your beans. There's another grain. Although technically, did you know that the beans are not really a grain, but they're because they compete with the grains, like corn and so forth for planting. They just bundle them together for the sake of convenience and call them a grain. Anyway, August 1 there, a nice low there, and the beans moved up a little bit. And then here we go. We made a nice little bit of a top there and pulling back from those 2 points there that I had. Here's the S&P has been wild and crazy, wild and woolly in the stock market. There you go. That's August 1 there. I had 2 points there. You had the new moon, you had Mercury, and we were making a top there. And then the next day, off the cliff it goes, down, down, down. And actually, this low here on the 5th, that was we haven't as of yesterday, despite the big down we just had, that that low is still held. So we had these tops here. Everything worked on the S&P. Had a top due there for the 8th, the 9th, and that was like a double top there. And then we went down to that 1 day low there. We had another date there, and then we popped up, and then we had the big down here into the full moon. Yesterday might have been a low. I have to see how. Oh yeah, well the futures overnight were up pretty good, up to over 20. I think I had 20 handles there on the S&P. So far that's working out pretty well. I told my people to look for on my nightly update, as you know, Dale, looking for a low yesterday. Here's sugar. Only had one date for the sugar. That was a Venus point. The Venus is with sugar, and 1 day late, but only a few tiny bit from the low price wise. So you easily could have got in there and bought the next day, and you were close in price and time for the turn. Here's the bonds. Oh, look, I got a red arrow there. I missed. Bonds were crawling higher, and then boom, and they kind of broke out on that bar there. So if you use the breakout, then you'd be okay. But I just to keep it simple, I marked myself with a red arrow there. But we had a beautiful top here yesterday, so far anyway, right there on the moon. Right, so it's a green arrow there. Here's the wheat. Same thing as the other grains. You made a beautiful bottom there with the moon and Mercury right on August 1. It rallies up, and then you're looking for a top there on the 8th of the 9th, and boom. And it drops out, falls out of bed, and then you had a chance to make some money. Here, okay, so now we're going to look at I have saved the fade for last there, Dale. I got several currencies on the rest of this page. Let's see if the currencies dance to the moon, okay? So here's the British pound. And by the way, that means if the currencies are dancing to the moon, forget about looking at central banks or interest rates and all those fundamentals, because it doesn't matter. They're all going up and down with the moon. So here you go. Here's your British pound. Made a little bit of low there. Nothing dramatic, but you'll see some of these others worked fairly well. The Canadian, we don't know yet on the full moon. It kind of had a downward bias into the moon, so perhaps, we don't know for sure, that the British pound might have made a low there yesterday. Here's the Canadian. I got a miss. I'm going to call that a miss there on August 1. It just ignored that, and so we kind of struck out on the old Canadian, but we made up for it on the euro. Look at the euro there. Bang, a spike low there right on August 1. So you might want to be paying attention to this stuff. It's pretty good. It works a high percentage of the time. One of the best ones historically for doing this on the currencies is the Japanese yen. It works over and over again. Look at that. Look at that spike low there right on August 1. And then boom, rocket time. Up we go. I'm talking about finding a great trade. Wow. Here's the Swiss franc. Making a low on August 1. New moon, Mercury doing its thing. There you go. Here's your US dollar. Made the high of the month so far, right on August 1. So there you go, right on the moon. So here's what's coming up in the future now. We got, we just had last night. We had there's something called a natal chart. That's when something began, like when you were born, Dale, or when our country was founded. We take a snapshot of where the planets and everything were at that moment, and then we look at the cycles now and see if there's any harmonic points, cycles in relation to those points. Last night we had Saturn at 90 degrees to where Saturn was on July the 4th, 1776. So that might have been something important. Maybe that was correlated to that was yesterday, to the top and the T-bonds. You know, it could have been the top and T-bonds because specifically Saturn has to do in the U.S., has to do a little bit with bonds and investments, particularly bonds. So here we go to this weekend. We got Mars going into Virgo, and that's indicating a change in trend for beans. If the beans fall down here, you might be looking at the beans. Last time we had a change in sign for Mars was back in June and July. It went into Leo, and that Leo is gold for one. And, you know, gold had a big run during that period. Here we go. So maybe beans are going to have a run now. Here we go. Mercury. Mercury is the grains, and Mercury is going to be peri-healing. And so you want to keep the grains are very prominent in these indications here for this time period. So watch your corn, oats, soybeans, and the stocks respond to everything, and wheat. And so now, any questions from your chat room or whatever you call it there, Dale?
Let me see.
Hello.
I'm looking.
Okay.
Okay.
How many people you got there?
No questions.
Okay. Well, I'll be happy to teach these people how to do this so they'll get a clue.
Any questions for Norm?
What's that?
I'm asking.
Okay.
Any questions for Norm? You could write them in chat right now. I would like to ask him about moon phase, especially full moon and new moon.
What would they like to know?
He explained that. Gold next few days.
Well, we just had a full moon yesterday. What did gold do? Was it going up or no? 75, 80% of the time, if a market gets to an extreme point, it will reverse on these points. If it's going sideways, that's not a good setup. So I would take a pass.
Luis Claudio Pereira usually interprets full moon equals bearish, new moon equals bullish. Is that wrong?
I think you're getting in trouble sometimes being predisposed to one way or another. The easiest way to look at this is, like I said, if the market has makes an extreme, you get overbought, oversold. Where there's a 75% chance that on one of these points that it's going to reverse. Okay, that's pretty good odds, right?
Okay.
If it doesn't reverse, then you got a stop loss and you get the hell out of the way.
Okay.
In acceleration mode, you know, right?
Where can I find a good source to find out where the planets and moons are in their orbit?
You could probably Google it, or you can get a hold of me and I'll give you a free class. How's that sound?
Okay.
People have the day trade in 30 minutes, been very successful, and I can teach you the swing trading. That's a little more complicated, but we can do that in about a 5-hour class.
Okay.
You
so you want to give them your information now, Norm?
If you mention your name, Dale, the free class, I'll give them a double your money back guarantee on the free class. How's that sound?
Okay.
That's a joke, Dale.
I know. Okay. All right, so there's Norm's contact information.
There's my contact information on the screen there. You can call me. You can email me. And let's see, I'm in Florida on Eastern Time, 239-594-3939. And Winsky at embark with a Q, mail.com. You can Skype me, and Winsky _digit1. And looking forward to helping some of your folks there, Dale.
Okay, Norm, thanks for being here today.
I appreciate it. Thanks for having me on your show. Hope I can help some of your folks, you know.
Okay, so there's Norm's information. And that's a wrap for our week. Remember, don't just count your pips, count your blessings. See everyone Monday. Adios.